It's 10 a.m. right here in Lagos, Nigeria. Great to have you join us. Good morning, good evening, wherever you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's happening with the markets there. We see oil prices edge higher today. We're trading near a 7-year high hit last week as investors bet, supplies will stay tight with a limited production hike by major oil producers and a strong post-pandemic recovery in fuel demand. Brent crude for April delivery was up 14 cents at $89.40 a barrel. The front month contract for March delivery expired on Monday at $91.21 a barrel, up 1.3%. U.S. West Texas Intermediate crude rose 13 cents to $88.28 a barrel, having gained 1.5% in the previous day. The benchmarks hit their highest level since October 2014 on Friday at $91.70 and $88.84 respectively. They've gained about 17% in January, the biggest monthly gain since February 2021 amid supply shortage and geopolitical tensions in Eastern Europe and the Middle East. And as part of efforts to boost production activities in the manufacturing sector, the central bank has launched what it calls the 100 for 100 policy on production, which targets the provision of credit facilities to the manufacturing sector. Speaking at a launch in Abuja, the governor of the central bank, Mr. Gordon Emefiele, explains that some of the targets of the initiative includes increasing local productivity, improve non-oil exports, and improve foreign exchange earnings for the country. Do take a listen.
Once again, the auditorium of the central bank comes alive as the central bank governor, Mr. Godwin Emefiele, through a series of interventions, introduces the 100 for 100 policy on production and productivity. The idea is to empower Nigerians in the manufacturing, agriculture, the extractive industry, petrochemicals, healthcare, and logistical services into accessing loans of about 5 billion naira, which will in turn boost their businesses and create about 20,000 jobs.
The CBN has continued to introduce various policy measures in the form of interventions to stimulate low-cost and sustainable financing to priority sectors and segments of the economy. The 100 for 100 policy for production and productivity is one of such interventions designed to fast-track productive activities in priority sectors.
The 100 for 100 policy for production and productivity targets the provision of loan facilities to 100 investors every 100 days. There's optimism here that the policy will address youth's restiveness and lift some Nigerians out of poverty.
The youths from age 18 to age 35, 40, we have seen the challenges. Boko Haram, we have seen it. We have also seen IPOB, unemployment.
I believe, looking at this specific 100 for 100, one thing that is very pleasant and pleasing to us is that you are not only encouraging the investments in new capacity, but also in brownfield investment that will expand existing capacity.
After the speeches, the first set of beneficiaries are each presented with checks. 28 companies have been selected for the first phase of the launch, with projects valued at 23 billion naira.
All right, now to our first conversation. Well, it is apparent that for Nigeria to achieve economic development, a diversified economy would make it easier. Non-oil export strategy is key to the federal government's economic agenda. How can Nigeria boost its non-oil exports with so many barriers and headwinds with import and the export business? Let's talk to Dr. Kaide Farintona, National Vice President, Association of Nigeria Licensed Customs Agents, ANLCA. Great to have you on the program. Good morning.
Good morning, sir. I'm delighted to be on this morning.
Great to have you on the first day of February. Now, let's get into it now. So in recent times, the Nigerian customs have, intercepted cargoes, containing cocaine and hard drugs in the ports. And the customs have also fingered freight forwarders as aiding the clearance of these. How can you defend this?
Well, thanks. That's a very technical question because the very government agencies will always apportion blames. However, I remember at the last towards the last quarter of last year, 2021, we did collaborated with Nigerian Drug Law Enforcement Agency, where we tried to sensitize our members on the need to, when they see something, they must say something. That's number one. They should also make sure that they should not facilitate clearance of psychotropic substances, drugs, cocaine, and what have you from the seaport. And I remember the NDLA chairman sent one of his directors to our office, where even Anaka is one of the ambassador of WADA. WADA is a war against drug abuse. So if custom is now shifting the blame to freight forwarders, that is not too good for us, because I do know that NDLA, which is the agency that actually saddled with that responsibility, will never push the blame to Nigeria, to freight forwarders, knowing fully well that we are actually trying our best to sensitize our members to make sure that they do not facilitate clearance of illicit drugs, psychotropic substances from our waterways. However, you never can tell if out of 12 the disciples of Jesus Christ, you have Judas. There are some people who may be actually indulging in this to make money. And we have also told our members that anyone found wanting or found to be culpable in this act will be delisted, will not hesitate to make sure he or she is arrested, and we hand him over to NDLA. That's number one. Secondly, we have also enlightened our members, because we now have some group of freight forwarders who take their bill of lading online through internet or whatever. So they do not even have access to the consignee who has this consignment. All they have to do is they forward them the bill of lading, wire them the money, clear this consignment. We have told them that make sure that you are able to, number one, give an indemnity form to whoever is your importer. You must also create a contact. If the consignee is not available, his relative must be available in case of this issue, so that we'll be able to know how to fish the importer. Recently, we have a case where I think Ghana, whatever, was arrested, and we have told the agent, make sure you produce the importer. And he succeeded in producing the importer. So apportioning blame or shifting it to freight forwarder is not too good for us. We are trying our best to make sure we sensitize our members not to be part of clearance of illicit drug from our waterways.
All right, but the freight forwarders are quite an important aspect of international trade. But how can technology help your people do the work even better?
Yeah, technology it has its advantages and disadvantages. One of the disadvantages is that I can be online now, and I meet maybe a client who wants to bring in consignment to Nigeria. We establish maybe contact, and he said he's going to send me consignment. He did send me that consignment. We have not even seen at all. So he will send you the consignment and send you the bill of lading, and even wire you the money, clear that consignment. All you need to do is to make sure that know your customer well. So you need to know your customer, establish minimum, at least a contact on how he can be reached in case of issues like this. And also, we have told our members to make sure that they give their clients indemnity, so that you are indemnifying yourself that in case anything happens, these are the things you told me that are in your consignment. A 1x40 container said to contain so things. Anything found to be offensive in that container, that freight forwarder or custom broker should not be held responsible. However, by virtue of the fact that having the original bill of lading, or being the custodian of the good, or being the freight forwarder clearing that consignment, you are the first call. So you are the first suspect that will be arrested in case anything happens. That is why it is very, very expedient for any freight forwarder to make sure that you are able to trace your importer or the consignee that gives the consignment to clear. It's very, very important. Because we have some people whose line of business is to make sure that they shun the queue, or they are non-conformists, and they want to bring in these psychotropic substances, illicit drug, because we now have a situation where in the last 24 months is becoming increasing. Is increasing seriously the rate of importation of psychotropic substances, and they'll find some gullible agent who wants to clear it, and they give. And although we may have some other classes of freight forwarder who knows what they are clearing, I can't actually defend those ones, but I know that 70% of those people are actually innocent.
All right, I guess it's about sifting the good eggs from the bad eggs right there. But let's look at another issue now. The 4.1 trillion naira, revenue target set for the Nigeria Customs Service, which is a 145% increase. Quite a huge target, if you ask me. But what came to mind when you heard about this?
Yeah, what came to mind is that because I am one of those that have been preaching in the last 2 years that federal government do not need to give Nigerian Customs Service target. If you don't even give them target, I believe that we can surpass whatever you have given them. It has now created to a situation in the last 2 years where Nigerian Customs Service personnel twist Nigerian importers, deliberately slam them with illegitimate DN, that is demand notices. Even when you have your invoices now, you are subjected to queries by Nigerian Customs Service because they know that all they have to do is to make sure that they meet up this target at all costs. And that's why they go extra mile to do illegitimate things. And the General Agreement on Tariff and Trade has 6 principles on the issue of value of goods. If I have a consignment that I brought in, there are 6 principles. The first one is my transaction value. If custom is querying my transaction value, there are other 5 principles to follow. And this law has been domesticated in Nigeria. But unfortunately, we have a custom that do not follow this law. All they have to do is either to go on internet value or an assumed value by that officer and slam it on you. So giving them 4 whatever trillion target this time around is going to create 2 things. Number one, Nigeria importers may now run away from Nigerian seaport, resort to other neighboring countries, now still smuggling this consignment through the unapproved route. That's number one. The other one is that the very few ones that will be coming to our waterways, you may have enough litigation in the year 2022 because I cannot buy a commodity for $5 and Nigerian Customs Service will be telling me that internet value is $15. And these are the things that is not acceptable and that is causing a lot of chaos and creation. And that is why we have a situation where Nigerian Customs Service now has shifted from professionalism to make sure that they are not even doing what is called trade facilitation again. All they want to do is that they meet up that target at all costs, at whatever cost, whether to amputate the trading community or to slam illegitimate and arbitrary demand notice on the trading community, which is not too good for us. This is a very, very sad thing.
I guess maybe the target shouldn't be revenue at this point, but for customs to achieve its revenue targets, freight forwarders must also make adequate and honest declaration. As the national, vice president, how do you see compliance there?
Yes, I put it to customs, and I'm giving a challenge, a public challenge or debate, that in the last 4 years, they should give us the data of the revenue they have generated. We have 2 types of compliance now. We have the voluntary compliance, and we have forced compliance. Let them give us the data of voluntary compliance and give us the data of forced compliance. You will now see a situation where in the last 4 years, the level of compliance, the graph has been increasing. Level of compliance is increasing. But when there is no enabling environment, that's number one. When the government is only interested in target, there's no trade facilitation. The World Customs Organization, in knowing fully well that we can have a situation where somebody may clear anything out of the port without going through the process, created a department called post-clearance audit, meaning that if you succeed in bringing any consignment out of the port illegitimately, the post-clearance audit will do what is called post-mortem, exhume the dead body that has not buried very well, and issue you demand notice. That is why you license all the various freight forwarders in the port. But we have a situation where it is very unfortunate that the level of compliance is increased on a daily basis or a yearly basis, but there is no enabling environment. That's number one. No, importers are not even encouraged. That's number two. Trade facilitation is zero in our waterway. That's number three. And I keep telling everybody that ease of doing business is not existing in our seaport. And this is very, very unfortunate.
Quite. All right. Another issue now, $3.1 billion customs modernization project. The objective is to completely automate every aspect, of the customs business. What are your thoughts on this project?
Yes, I look at it as one of those elephant projects. I remember my elementary language, and they would say an elephant project. a white elephant project that, number one, it is an avenue to siphon our money. We do not even need that contract ab initio. The issue of modernization of customs started during the era of late Diko Inde, and they have started for a very long time. After that, we introduced what is called pre-arrival assessment report to make sure that we key into what is happening in the international climes. After that, we started what is called e-payment. So talking about modernization of customs and now giving a contract for almost $1 billion, it is illegitimate. It is not necessary. It is another way to siphon the public taxpayers' money, because
No,
all
but
we
they're
need to
talking
do is to
about,
improve on all the things.
but sir, they're talking about automating every aspect, of their
Yes, talking
activities.
about automation. Automation is a gradual thing that we have started in the last 10 years. So it is a thing that we just need to conclude on a project that has started before now. Why do you now bring in Chinese? All in the name of you want to increase automation. Why do you now, we have local engineers, we have Nigerian engineers in line with local content. These are things I even think Nigerian government should be thinking of. In line with local content, bring in indigenous people that can actually give us the better software, increase the automation of Nigerian customs service, save more money, because we're in COVID-19 now. Every country in the whole world is looking for how to save more money and generate more money and not unnecessarily tax the citizenry. And this is what we lack in Nigeria economy, and that is not too good for us. Why do you subject our economy to that kind of strenuous situation, giving us that preponderance, almost $1 billion to a foreigner, knowing fully well that these are the people that will use the handbag and take it abroad? Why don't we look for a local engineer or an indigenous engineer that can do it lesser than that? Whatever he or she makes, he pays his tax back into the Nigerian economy. He employs Nigerian youth who are graduates and do not have jobs. It is a white elephant project and another way to siphon money. And I want to believe maybe the government of today is looking for money for election 2024, 2023. It is
Bringing it home, bringing it home is
my personal opinion.
actually, yeah, well, bringing it home is actually a good idea. But let's look at this the electronic traffic management system for the Apapa port, known as the e-collop system. It's been up for about a year now. How would you describe the impact so far?
Yeah. Yes, like I told somebody in the Nigerian Port Authority when it started about a few months ago, about I think December, I told them e-collop system has succeeded in doing one thing. It has succeeded in reducing traffic gridlock we have in the upper seaport and the volume of vehicular traffic into the seaport. It has not succeeded in giving us the desired result. What is the desired result? To make sure that cargoes are existed and they have unhindered access and there's free flow of traffic. We now have a situation where some people who are contractors and they are not even real freight forwarders have hijacked that portal and they are not even using it to make their money. And I think I gave them this advice that they are going to look for you to look inwardly. And Nigerian Port Authority, I remember about 4 or 5 years ago, normally gave licenses yearly. So why don't you bring out this data now, collaborate with Nigerian Customs Service, look at the current existing licenses that are still operational. Then you now allow this particular license to have access to your A2 or e-collop system. That will now extricate all the people who do not even have business in the seaport and they don't have cargo to clear. All they want to do is to make money from that project. I think they need to do something and wake up on that e-collop system. It's a very lofty idea, very laudable. But implementation too, we need to base up on it. So that, because I told them that if collop system fails, then we are doomed, because nothing seems to be working again. We have had tax forces here and there. They have failed due to corruption or what have you. So if this e-collop system now fails, then I don't know what we can resort to. It's very, very unfortunate. But I do know that the management of Nigerian Port Authority will wake up on that and actually improve on it.
All right. Well, we'll be tracking that aspect of the port. Thank you so much, Mr. Dr. Kayode Farinto, National Vice President, ANLCA. Thank you so much for coming on the program today.
Thank you very much. Thank you.
All right. So after the break, commodities market update is next. Do stay with us. This is Business Morning. Welcome back. Well, the major oil marketers in the country have reacted to the recent suspension and removal of fuel subsidy by the federal government for the next 18 months. At a meeting with energy correspondents in Lagos, the chairman of Moman, Olumide Adeosun, says the postponement of the plan will give enough time for government and petrol marketers in the country to implement the changes needed to transform Nigeria's economic structure. Do take a listen.
The news came as a surprise. But on reflection, and we're yet to consult with government formally, we have made some informal consultations. The consultations have been against the backdrop of the decision having been made. So we've engaged government, and we have one or two senior level meetings planned for this week. The impact is obviously the delay, because the reality of the matter is that we had not really started to implement the elements of the plan. So we were not. So even though the act had been signed, we were not really operating in a deregulated world. Otherwise, there would be no limits on petrol pump prices as a case in point. We must. This cannot be a setback, really. It must be a platform for change. And what do I mean by that? We must use this opportunity, really, to come up with a plan. And we now have an 18-month runway, assuming that's the worst-case scenario, to come up with a real plan that allows us to manage this change with the degree of gravity, seriousness, and focus that it requires. Right? We're ultimately trying to transform something quite structural in Nigeria's architecture. So it's absolutely critical that we don't treat it as though we're reporting on a news item, on an FX change. It's a generational change, and the plans must be in place. So I think we must turn this minor setback into a platform. Yeah.
All right, that was Chairman of Moman, Olumide Adeosun. Now for commodities market update, let's bring in Adesola Simoni right there. Great to have you, Adesola.
Thank you for having me, Ladi.
Good morning. So we see oil prices, currently trading above the 7-year high, $88 per barrel, and heading towards 100. Yeah, we've been looking forward to that $100 mark for a while now. How's it looking for you there?
Thank you for that question, Ladi. So like you've seen, oil has really had a bullish run this year, increasing around 12% year to date. And this week alone, it has increased about 1%. What are the key drivers of it? One is majorly the return or revival in oil demand growth. And we can see that revival in oil demand growth to pre-pandemic levels. And we can see that in the US crude stockpiles, US inventories now at record lows. We also see supply side factors such as one, OPEC's inability to increase production sufficiently. We see many countries like Nigeria and Angola who are struggling to increase their output. We're also seeing geopolitical tensions such as the issue with Russia and the US over Ukraine. We are seeing also geopolitical tensions in the Middle East. All of these are threatening, the supply of crude, and they are, pushing prices upward. Now, what does this mean? Well, one, if oil reaches $100 per barrel, then it might also increase energy prices, which is driving inflation in many countries, particularly for oil importing countries. And this also has implications for inflation globally, because it would now force central banks in advanced countries to act more aggressively in terms of their interest rate hike, and that would tighten financial conditions globally and can lead to capital flight or capital outflow from emerging market economies like Nigeria, and that would then pressure our exchange rates and our external reserves. In terms of going forward, many more, like you said, many more big banks and oil majors are seeing oil reach $100 per barrel. But some are more conservative, like Goldman Sachs. They see oil reaching $100 per barrel in the third quarter of the year. But some other firms see it reaching $100 per barrel in a few months' time.
All right, see, well, the bulls seem to be in control right there in that market. But, here in Nigeria, a recent report by the National Bureau of Statistics showed that, the cost of transportation increased by 283% to 479. Talk us through the key points in that report.
Okay, thank you. So if you look at, looking at the report, if you look at a bus journey within a city, like a bus constant drop, for instance, like from Ikorodu to Victoria Island in Lagos, Nigeria, that has increased around 5% month on month, but around 33% year on year to 446 naira 50 kobo. If you look at intercity journey, bus intercity journey from, let's say, from Lagos to Ibadan or Lagos to Ogun State, we've seen that increase 5% month on month. That's comparing November 2020, December to November to December 2021, month on month, and then December 2021 compared to December 2020, year on year. That has increased 5% month on month and 20% year on year to about 2,600. If you look at the motorcycle drop, constant distance motorcycle drop average in Nigeria, that's increased around 5% month on month and 28% year on year to about 250 naira per ride. Now, if you also look at waterway transport, it has increased around 2% month on month and around 12% year on year to about 862 naira. Now, here is the interesting part. If you look at air travel, like from Lagos to Abuja, for example, that has increased only 3% month on month and 4.8% year on year to around 36,000 naira. This, to me, suggests that the mode of transportation used by the average Nigerian has increased significantly, while, for the average of the poor Nigerians has increased significantly, both month on month and year on year. Meanwhile, the mode of transport for the richer people, for instance, if you look at the price of fuel has remained constant around 165 naira per dollar in the period, 165 naira per liter in the period under review. But also, if you look at the cost of air flights has also is increased only marginally, around 3% or 4%. So for me, this suggests that the cost of transportation for poor people has increased, which further constrains or contracts their disposable income. Also, the cost of logistics transportation has also increased, and this has implications for inflation.
Right, quite interesting, interesting one there. But the NNPC spent about 100 billion on refinery rehabilitation last year. Yet no state-owned refinery is working. What does this mean in context of this fuel subsidy discussion?
Okay, so for me, we've had this discussion last week, Ladi. Bringing Nigeria's refinery up to speed, or improving or boosting Nigeria's domestic refining capacity is the necessary condition for subsidy removal. Because if we are not able to boost our domestic refining capacity, if we are not able to significantly reduce the imports of petroleum products into the country, then it will be extremely difficult to remove fuel subsidy without having strong revolts from labor and etc. Now, the problem we have with refinery rehabilitation is that we've been having this discussion for ages. A lot and billions and billions of naira have been pumped into these refineries, but yet they are still not working optimally. And that's still not working optimally. And this brings up issues around value for money. We are spending so much money to rehabilitate these refineries, and still they are not working optimally. For example, to my knowledge, last year, I think in March last year, the federal government approved $1.5 billion for the rehabilitation of the Port Harcourt refinery. The Port Harcourt refinery has, I think, 2 plants with a combined capacity of 210,000 barrels per day. I am cautiously optimistic that after it has been rehabilitated, it will be able to produce some crude at the installed capacity. But if history is anything to go by, if you look at 2015, I remember 2015 when the Minister of State for Petroleum, then Dr. Ibe Kachiko, was also on this, trying to rehabilitate the refineries, and they worked for just a little bit, and then we had these issues of efficiency again, producing at only about 30-20% of their capacity. So that's just the big question mark.
It's quite a huge one. All right, let's look at other matters now. You see the central bank new guidelines, slash the ATM withdrawal charges and interbank, transfer fees. What's happening there? Because recently I talked about, some of these fintech companies actually, slashing fees. They call them bank of the free or whatever. So is the central bank towing that line?
It is possible. I mean, if you look at the guideline, it was a 76-page guideline, and part of the reason for changing the guideline was, to reflect market reality. So this fintech could be some of the market reality that the central bank was talking about. But if you look at, it was a very, very long guideline, but some of the interesting points is the decline in ATM charges from 65 naira to 35 naira. So on your third withdrawal from another bank's ATM, I think it's now the rates is now slashed from 65 to 35. Also, interbank charges is down from 300 to a maximum of 50 naira per transaction. So for banks, it is not good news at all, because definitely it's going to hurt their revenues.
Exactly.
It's also going to hurt their profit. But for the average guy on the streets, it's good news in terms that it's going to increase his disposable income a little bit. Even if it is a little bit, it's going to increase his disposable income. But also, this has implications for the what we call the velocity of money, the rate at which money exchange hands. With this slight reduction in the cost of withdrawing cash or having cash at hand or transferring cash between banks, I think it's going to increase the velocity of money marginally.
Right. Okay, so now the external buffers, now we see the level of the external reserves is declining steadily. Now we've gotten back to the $30 billion range. What are the implications for the exchange rate?
Currently, level of external reserves, I think about $40.1 billion. And at this current rate is edging towards $39 billion, like you said.
Yeah, if it gets to that 30 level again.
No, I think it may get there. It may get there, right? But I think that why we are seeing this is because we are not able to, even though and the oil price, we are operating in the elevated oil price environment. I mean, we said that oil prices are currently trending
why aren't we
above 7-year highs.
We're not producing to get
well,
to enjoy that to enjoy that rally.
We're not reaping the benefits. We're not reaping the benefits. Also, we are paying heavily for importing PMS as the price of oil rises in the oil market. The landing cost of PMS in the domestic economy also rises. So we are paying more for import refined petroleum products, but also we are not gaining the full benefit of the higher oil prices. And this has, like I said, implications for the external reserves. Definitely, the accretion to the external reserves is going to be low, is going to be slow. But also, there's this expectations of a tighter monetary conditions in the global economy. And like I said, if because of the higher oil prices and inflation in developed economies, if the central banks in advanced economies increase their interest rates more aggressively, then we might see capital flights away from emerging market economies. And this is going to pressure our exchange rates. It's also going to pressure our external reserves, and it's going to impact the ability of the central bank to continue to inject FX into the market.
Yeah, quite a tough one there. But talk us through developments in the domestic commodities market.
Okay, in the domestic commodities market, prices are generally flat. If you look at our slides, you see most of the commodities that we cover are flat. If you look at the price of rice compared to December 2020, it is still flat at 30,000 naira per 50 kg bag. The price of a 50 kg bag of beans is also flat at 42,000 naira. Price of cement is flat. Most prices are flat. We are seeing slight declines in price of gari. Gari is down 3.6% to 13,500. Also, semovita is down. A 10 kg bag of semovita is down 2% to 5,100. A few prices are also increasing, like price of yam is up. A medium size new yam is up 50% to 1,500. And a 50 kg bag of flour is up 3.8% to 21,500. So what we are seeing, I think, is a little bit of price stickiness, because I expect that compared to December last year and January, the demand conditions have changed. In December, we had festivities, so there was huge demand and the prices, increased. But now, towards January is usually considered like a dry month for hospitality or even for businesses. And as a result, the demand conditions have changed, but the prices have not really reflected that. So that's what we call price stickiness in economics, in the sense that the prices are not adjusting fast enough. But also, this year is a pre-election year, and in Nigeria, we're very good with what we call stomach infrastructure.
Right.
So going through the year, I think that the price of commodities are going to, are going to inch upwards because of this huge pre-election spending.
All right. Okay, let's look at global commodities now. How's it looking there?
So global commodities, all the commodities we cover are trending upwards. If you look at grains, wheat, and corn are trending upwards, mainly because of these geopolitical tensions between Ukraine and Russia. Because these countries are huge producers of corn and wheat, and because of the geopolitical tensions, I mean, over the weekend we saw a lot of troops, Russian troops, gather at the Ukrainian border. So there's threat of serious disruption. And that is, causing the price of wheat and corn to trend higher. For cocoa, like I said, I also seen the price of cocoa higher because of strong demand coming from the United States and Europe, particularly as these first events are coming up. We have Valentine's coming up, we have Easter coming up, and these are huge chocolate events, and these events are simply driving the price of cocoa upward.
Yeah.
And if you look at the price of sugar, also the price of sugar is higher. This is because of bigger demand as the world opens up. There's more demand for big events like sporting events and so on, and that's why we're seeing the price of sugar,
rise up. And I like the way you called that one the chocolate events for February. All right,
Yeah.
this is Leslie. Thank you so much for coming on the program. A research analyst with Financial Derivatives Company. I will take a moment now.
Thank you for having me.
All right, now for an opening call to the market, we have Agnete. So, Agnete, the local bourse finished up January on a high note, while global markets are still struggling.
Yes, good morning, Ladi, and
Morning.
let me say Happy New Month.
Happy New Month.
Yes, yeah. Nigeria's equities market has defied, the trend, the current negative trend in the global market. It has been able to sustain its own positive trend, which we saw in the most part of January. Of course, the last trading day yesterday, which was January the 31st, the market ended the month in the green, up by 0.91%, which translates to about 226.12 billion naira in value. That just shows you that this market has been very, very profitable in the month of January, especially because when you look at December, we didn't see much of that rally. We were expecting a Santa Claus rally, but it looks as if Santa came in rather on the late side. But of course, it printed a 9.2% year-to-date gain. That's for the month of January. We're starting a new month. But we're just reviewing what happened at the market, especially within the last part of January. So far, that's what we've gained. And then, of course, we had 33 gainers against 21 losers. This is how the volume of transaction turned out as of yesterday. The total volume of transactions was up 39 just about 39, nearly 40% at 435.79 million units. Value was down by about 31.69%. While the number of deals was up by 27.90%. It just shows that investors, yes, they're really prying into the market. They're taking advantage of most of the gains, and especially because some of these the share prices of some of these equities were on the low side, so they're now taking advantage of it. Now, when you take a look at the sectoral performance, it's mostly a mixed bag. But at the end of the day, it's mostly the greens that have it, particularly of the oil and gas sector, followed by the banking sector, which was up by 0.43%. Oil and gas was up by 0.47%. Now, stock of the month, that's what I call it, is Airtel Africa. And that's because it has become the number one, the first to cross the 5 trillion naira mark on the NGX, overtaking Dangote Cement as at January the 28th this year. And of course, it is now worth more than all the banks, the 14 banks listed on the NGX, all of them combined are worth about 3.77 trillion naira. So this second largest telecom stock on the NGX, is now the most valuable equity on the Nigerian Stock Exchange. And at the same time, we're still talking about the milestones of this telecom bellwether. Its share price is currently at an all-time high of 1,271 naira per share, which is the second most expensive when you look at the share price of Nestle, which as at the close of business on Monday was 1,435 naira per share. So that tells you that this is a market. Don't mind the red color. That red color actually turns things green, and sometimes if it has a mind of its own, can turn it to its own color. Now, still talking about this telecom bellwether, the London Stock Exchange announced that it will be joining the FTSE 100 as at the close of business on January the 31st, which is yesterday. And of course, that has now crossed into the FTSE 100 index on the London Stock Exchange. And it comes just about 2 years after the company floated on the LSE. That was back in 2019, and has since demonstrated significant growth in its customer base, revenues, profits, profit margins, as well as cash generation, and strengthened its balance sheet through reduced leverage. So we will be having our equities market analyst, who's a stockbroker at CSL Securities. If we have him there, maybe you can talk to us more about how that equity is performing as at the first trading day of February. Now, let's switch over to the fixed. Well, I think I could have gone to the fixed income market, but I think we'll take a pause a bit. But let's still talk about the equities market. It's still one of the most profitable market for investors. And I think we have our guest, Richard Akimoladu, to tell us more about the equities market. Thank you for joining us, Richard. Okay. Sorry about that.
We'll take a quick break right now. When we come back, we'll try and get Akimoladu on the phone and continue the market analysis. That's in a moment. Do stay with us. Welcome back to Watching Business Morning. Now, let's get back to Anita with the market analysis. Hello, Anita.
Okay, Ladi, should I tell you welcome back or I tell myself welcome back?
Welcome back.
Okay, both ways. Yes, I was telling you about the fixed income market. It's still been relatively quiet. That market is not doing too good, if I would say, because especially when I talked to I spoke with one of the traders there, and she told me that the market is rather quiet, has not been able to give a particular reason why the quietness has continued. Maybe it's the inflation figure, maybe it's the environment, the current environment, financial market environment is not too favorable for the fixed income market. But as at yesterday, it was relatively quiet. Average yield there was unchanged at 11.5%. But then most of the deals was concentrated on the 27th of March 2050, which had 14 deals valued at 13.10 billion naira, price high 100.23%. At the tail end of it, the total number of deals carried out as of yesterday was 41 deals, all valued at 34.10 billion naira. Over to the treasury bills market, was rather bearish, and then we had just about 2 instruments traded yesterday, 26th of January 2023. It had the highest number of deals there, 17. And then the 25th of August paper, it had 3 deals worth about 3.30 billion. So combine the 2 of them, that's what you get, 20. And at a value of 14.80 billion. That's for the treasury bills market. Now flipping over to the open market securities, or what you call the OMO securities. It's also unchanged, but the average yield there expanded by 5.2%. And then, of course, the number of deals that we had as of yesterday is 11. And then the highest there was on the 27th of January, 2023. So that market is still not too impressive. And of course, what to expect at the market, before I go there, the CBN special bills had only 2 deals on the 30th of May, 2022. And then, of course, what to expect at that market. We're expecting that this week that the CBN will mop up pent-up liquidity in the financial market in the financial system. And then, of course, 80 billion naira worth of OMO maturities is expected to hit the market. So we'll see how investors would react to that, the expectation of that OMO maturities hitting the market at the close of business today. So that's it for the fixed income markets.
All right. Maybe when the CBN looks at hiking rates, maybe we'll see some action in there, but we don't want that.
Yeah, we'll keep our fingers crossed for it.
Fingers crossed. All right, Anisi, thank you so much. Okay, now let's look at other markets now. That's the crypto market. We see, let's look at the market cap there. We see the market cap still holding above the $1.6 trillion mark at this morning. It's not looking good. It's actually looking good for the market. We're seeing a lot of green. Market cap is up, almost getting close to the $1.7 trillion range. Prior to Bitcoin now, we see a corrected low below the 38,000 pivot level. Bitcoin traded below 37,000, but the bulls were active near the $37,650 price mark. Let's have that price of Bitcoin right there. We see, okay, the market cap there, $1.76 trillion, up about 5.17%. 24-hour volume traded $65.64 billion. And let's see, price of Bitcoin this morning. Price of Bitcoin trading about 38,000, got up about 3.50%. 24-hour volume traded in Bitcoin, $20.30 billion. Now, Ethereum now. Let's look at Ethereum. Ethereum, $2,700, up about 8.80%. $13.33 billion traded in Ethereum. We see Ethereum has remained above the 2,500 level. As a result, Ethereum started a steady increase above the 2,600 resistance zone. Similar to Bitcoin, the bulls pumped the price above the $2,650 barrier, and the 100-hourly simple moving average, the upward move was such that the price even moved above 2,700. Highest formed near about $2,766. At the top also by market cap now, we see BNB there, up 2.81%. Solana 6.50%. Not looking bad. It's all green there. Let's bring in our guest now, Rume Ofi, right there. Hello, Rume.
Good morning, Ladi.
Good morning, Rume. Quite a nice-looking market this morning. How are you seeing it?
Yeah, good. We're seeing possibly the market reversal and a lot of indices pulling the market upward. But a lot of people are concerned about price, which I told them not to for now, because the investor settlements had to come in some point where they could just put in some money and the market would be back to all-time high again in a short period of time.
Right. All right, Rume. Another issue that's been trending now is the issue with Binance Exchange and, some customer accounts, especially Nigerian accounts getting frozen. How are you seeing this situation?
Actually, the issue started with the hashtag, which actually trended on Twitter. Binance Stop Scamming Nigerians. It was quite a shocking one, but the issues are being resolved gradually, and the concerns for those people using Binance in Nigeria actually was received. And from Binance's perspective, which I'm going to explain a lot of these things right here, is that it stems from issues around people not completing their KYC. For example, at some point, Binance have been in the news globally about certain compliance in certain countries, which actually warranted their movement out of some of those countries, right? So, like a big exchange platforms like Binance don't want to take such a risk anymore for countries like in Africa, which is an emerging market, right? They have some very huge amounts of users in Nigeria. So KYC is very important, because if you don't have KYC, users can be protected very well, and also to avoid issues of anti-money laundering, terrorism funding, and a whole lot of issues. So you must do KYC. A lot of people with ulterior motives see that as a challenge, right? And some of them also have double accounts, which is against the principle of the exchange platform. I think when signing in, some people don't read on some of all those things, right? Then the other one is people that have actually gotten themselves involved with stolen funds, that is, stolen digital assets, or maybe third-party related issues. For example, if you buy a digital asset from someone, and this digital asset has been flagged on the blockchain, when it goes to a centralized exchange platforms like Binance, they can easily get you to come and account for how that money is, how you got that money, or prove it. And the issue is, for this case, Binance actually has about a total of about 280-something cases of accounts being brought down. And about 38% of them is related to fraudulent activities from law enforcement agents around the world. You know, and the beauty of this technology is, if you do something, I was saying it today, that governors, you cannot imagine yourself getting into crime and using cryptocurrency and get away with it, because the blockchain, you can track it. It's just for the exchange platform to plug it to Chainalysis. Chainalysis is a software company providing security to exchange platforms, and they will track it. And when they track it to an exchange platform, which is the end game, most especially people who want to cash out,
So,
right?
so Rume,
So
I guess it's easier, you know, to track, you know, illicit funds, you know, through the blockchain. So that way you can't actually liquidate it. So that's the issue, right?
Exactly. They have to block them pending investigation. That is why some of these guys have to go crying that Binance stops scamming Nigeria, which I'm not speaking for Binance, but it is not really correct.
Right.
Things have to be done right, and Nigeria have to be a big player and play well in global way of things.
Yeah, it's quite incredible the amount of paper trail you can actually get on the blockchain. All right, Rume, thank you so much.
Thank you. Thank you very much, Ladi.
Okay, let's look at some of the top gainers this morning. We see it's quite green. There are a couple of double-digit gains this morning. We see the market actually recovering quite well. Can I have the top gainers list there? It's not looking bad. We see a couple of coins up there. We see Luna there up 18%. Solana up about 16% this morning. And you see the losers count is more of stable coins. So that means traders are leaving stable coins and getting ready to make some gains in the market. All right, that's it for the crypto market. Now, that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Bye for now.